Yes, guys and girls, welcome back to another BMO video. It is the first recording of the new year. Obviously, as you know, we do tend to take slightly longer breaks just before Christmas and up until sort of around the middle of Jan. Just because, again, markets are pretty dead over the Christmas period. It does go quite quiet, obviously, after New Year's. And then after that, it starts to pick back up again. So let's have a little look and hope you all had a good sort of break. Let's see how this year goes. So let me just minimize that and move that over there. Perfect. Right, let's go. Let's get right into it. So let's start from yesterday. Now, remember, nothing's really changed in terms of the overall theme. So remember, the theme right now is about what the Fed wants to do, whether or not they're going to cut again anytime soon. So what we have to think about is what data for us when we're trading like gold or stuff like the dollar, the yen as well, which as you can see has also seen a bit of issues because of what we've seen here. We have to ask ourselves, is there anything this week, that is going to allow us to understand that current theme? So we have to ask ourselves each week, what data is going to allow us to get a better idea about what the theme is, which, as you know, for the US in particular, it's about when is the Fed going to cut next, or if they're going to cut at all. So what we have to think is there any data? So let me just filter back to all and see what we had. So yesterday you can see was pretty quiet, nothing there that was of interest, So we did actually see as well, Friday last week, we did see NFP obviously, but we'll speak about that in the dollar section anyway. But yeah, this week, pretty dead. We had a couple of FOMC members speaking, but not too much. Obviously, you might have seen a bit of news about Powell and, the subpoena, etc. But that did get shut down quite quickly, and we did see a decent amount of sort of reversal around that idea. So we saw a bit of dollar weakness, which is perfectly understandable. Here, we saw that weakness because, again, loss of confidence, etc. But then we did see it get shut down quite quickly. Most notable, though, in like equities. So if you look at ES futures, you can see how we did come in lower on Sunday and Monday morning, and then it did pump as markets basically digested what was happening. And again, they thought that is probably not going to do too much. Then today, obviously, we saw CPI. So CPI, I'll have a little look at the underlying as well, but overall, there's nothing too much of a concern at the moment. Again, it's expected to stay at 2.7. The only downside move here was core, but I'd have to double check what the underlying is as well, just so we can have a bit of a better gauge of it. But I'll open up for now, and we'll look at that a bit later on. Then the rest of today is, as you can see, pretty quiet up until Trump. Where is he speaking? At some economic club in Detroit. So obviously, it really just depends on what he talks about there. We don't really know, really, do we? So let's just see. Wednesday, we have PPI, which, as you can see, is expected to basically sort of show the same figures as we saw from CPI today. We have to ask ourselves, right, each figure, is this telling us that cuts are more likely to happen or not? And the more it comes out suggesting a not side of the equation, the more likely the dollar has an opportunity to run higher and push higher. Because if we look, somebody was mentioning, I think I saw on Bloomberg yesterday, that, oh, not this one, whereabouts is it? This one. COT data. Somebody was mentioning how stretched euro is right now. So if I just look at that, just look at the net positions first. Yeah, let's get rid of this one. And we can see how pretty stretched that is to the upside, right? We can all agree that it's pretty high. And whenever we come into these levels before, it has struggled to trade higher. Basically, people thought it's a little bit too stretched in our opinion. And similarly here as well, non-commercial also, as you can see, we've not been this high in longs on the euro since, I guess this chart has over the past 10 years, right? Similarly for shorts, you can see how low shorts are. So we'll focus more on this blue line as well. Red line is more like retail traders, to be honest with you. But this blue line is also quite short in terms of the amount of shorts, shall we say, relative to the amount of longs. So we can argue that it's quite stretched in terms of positioning. So what markets are going to be asking is any data that comes out that battles the idea of dollar being so strong, the more likely we have to see it reverse and go slightly higher. It doesn't mean we're not sort of looking to sell the dollar anymore. What we're purely focused on is just, and you can see here, net positioning for the dollar is very neutral, right? If I just get rid of that as well. And this one, we're basically almost at zero. So it has that opportunity to run quite high. It's just we have to ask each data, Is this becoming more and more likely? If it is, then you may want to be slightly long the dollar for the time being, and then eventually you will get short. But we just have to think about timing. And it doesn't seem like timing is here just yet because we're seeing this get pushed back further and further. You can see how January is obviously 95% of a hold, and then March, 75% of a hold, April, 62% of a hold, June, and then June is when the first cut comes through. Well, through that period, people don't want to stay short the dollar if there's no reason from a data perspective to stay short. But yeah, we'll speak about that a bit later on, but hopefully that does make a little bit of sense as to what you can be thinking in regards to the USD. And then we have a lot of FMC members speaking. So obviously we want to see how they interpret what we've seen from CPI and PPI tomorrow. Thursday, GDP from the UK. Again, focus more on the 3-month average. That's what markets really care about, to be honest with you. So overall, just focus on that 3-month. Just get a 3-month average of it. It is also shown on Trade and Economics calendar, the 3-month average, or you can manually work it out. Unemployment claims, again, 215 is a rise, which technically is bad, but overall it's still within the sort of norm below 250. Anything below 250 is perfectly fine. Even if it rises from 208 to 230, 240, yes, markets will sell the dollar slightly, but they're not going to have too much juice because it's within the norm of data still. So only when it goes above that is when people do begin to question it. And then you can see a lot more FMC members on Thursday as well. Then Friday, we have Bailey, where is he speaking? Stated at the Bellagio group meeting hosted by the Bank of England. So hopefully they can give us a bit of a better guidance on what they feel they should do with policy. But apart from that, the rest of that Friday is pretty quiet up until we have a bit more FOMC members. So a lot of Fed speak this week. And hopefully we can get a bit of a better guidance. But that's just something to think about for the dollar. Yes, we do want to remain short it on a higher time frame. Just think about near-term time frame as well. Not just every opportunity I have to sell it. Also think tactically as well. There is a potential tactical rise in the USD. I'm not going to think like a huge high is being created like here, but what you'd think is like a move from here to possibly up to this high here, possibly a little bit higher than that, and then we go back being short because positioning. And the fact that the US data isn't actually terrible in terms of it's really bringing forward rate cut expectations. It's kind of getting pushed back further and further. The more it gets pushed back, the more likely the dollar has to rise. But yeah, apart from that, dollar, as you can see, we have a nice big old push during Christmas period, obviously, since the start of the year from Christmas period, which is perfectly fine. We obviously don't trade through that period anyway, so we kind of ignore price action, to be honest with you. But overall, yeah, dollar has risen quite nicely. Dollar yen as well. It doesn't seem like there's any reason for it to sell off right now, especially given we saw a bit of political issues in Japan. Gold, as you may know, we're having a bit of like potential issues around Greenland, as I'm sure you may have seen, which just brings forth some uncertainty in the market. And as you know, gold is a good uncertainty move. And then lastly, euro dollar. So euro dollar has moved quite a decent amount of downside, to be honest with you. We've just come down into a daily demand zone, but overall, I'm a little bit hesitant to buy it, only because of positioning. And sort of how the data in the US is starting to perform, where it's not really, screaming doom and gloom, where people are thinking, oh, we now have to cut in March, and we have to cut in April, and we have to cut in June. It's more so getting pushed back and back and back and back. And the more this gets pushed back, the more likely the dollar has to stay, or has the likelihood to remain stronger. But yeah, apart from that, that is myself. I'll do all three at the same time. So we'll do dollar, the pound, and also the euro. But yeah, apart from that, that's the news. Let's move on to all three. So the USD, the pound, and the euro. So let's start with the dollar. Remember, with the dollar, you have to ask yourself two things. Number one, let me share my screen quickly over here. Where is it? This one over here. With the dollar, you have to ask yourself, what are the overall fundamental view? So what you ask at all times is as follows. So let me get a text box. Higher time frame, higher HTF, overall view is, let's say, USD weakness, because overall slowdown in the US economy and other economies out there as well a bit better off right now, which obviously gives that overall view. However, you have to also think near term. I want to think near term. We're not thinking like, oh, for this day or this week. We're thinking more so, how has the view, or how could the view develop over the next sort of 0 to 3 months or 0 to 2 months time? You don't want to think a bit longer than that because things can obviously change, but just think near term. And right now, near term is data has not sold off as much. That would allow the Fed to cut. So obviously we know that this is the two views. So high time frame, most of the markets are pretty bearish to the dollar. Everyone can kind of agree with that, to be honest with you. But the near term is the data has not sold off as much, basically weakened. That would allow the Fed to cut. So what does that mean? Less rate cuts expected. So what we now have to think is, okay, if there's less rate cuts expected, the whole premise of dollar weakness is based on rate cuts being expected. But because the data so far anyway is kind of pointing to being less, and if you add on COT data being quite stretched or quite neutral for the dollar, but quite stretched in terms of the euro, people are going to think maybe there is an opportunity for the dollar to go higher over the near term, which will be the near term fundamental view. And then as this develops, you then think, is it sort of now telling us that the high time frame view is coming into focus? If it then we switch to high time focus and think, okay, dollar weakness. But for now, there is a possibility that the dollar can go a little bit higher for the time being. That doesn't mean you now have to completely switch your view. It just means for the near term, you can switch your view, and then eventually we'll go back to being the high time frame. That's what we think when we think about the dollar. Hopefully it makes a bit of sense. If it doesn't, just let me know. Just you can message me or at me in the Discord. But hopefully that's kind of what we're thinking right now. So let me just get up the CPI and we just want to have a little look. Actually, let me open up this in the new tab. And then what I want to do is just double check and see if they have a live. They do. So we'll just double check what the live commentary is saying. But let's just have a little look right now about what is happened in terms of the data. So the main ones markets do kind of think about is this one here. Services and shelter, these two here. So we now look at the overall trend and you can see it's still being quite sticky. 3% on services, 3.2% on shelter. Quite sticky components at the moment. And obviously this is all items less food below, which means core CPI, by the way. So right now, services and shelter are still quite sticky, quite stubborn, shall we say. And in that environment, you know, that doesn't point too much to rate cuts, to be honest with you. So overall, that is kind of what we've just based on purely that anyway. I just want to see if there's anything else here in terms of the live commentary. This one here, let me just see. While investors will cheer the release of further evidence of disinflationary progress, the Fed will remain wait and see mode given the uncertainty until more distance can be put between the data and the shutdown. This release is positive for risk assets and increase the odds that the Fed will provide additional policy support in 2026. Basically, eventually cutting, but it's just a matter of the when, because we know they're going to cut, right? People can agree that the Fed will probably cut again. As you can see right now, people expect it to be in June. So we have to ask ourselves, is it getting pushed towards the middle of the year, Q3, or being brought forward towards April or March? And the only reason you see this be brought forward is if the data is not good. And right now, it hasn't really fallen off a cliff that would allow the markets to think, okay, they're going to cut after January, around March or whatever. So just think about it from that perspective. Now, just want to see that I think I had another one here that I saw earlier, which was, I did put it in the Discord. Where is it? This one here. So let me open it up and let's just have a little look. So obviously the dollar did drop yesterday, given the Fed subpoenas. But remember, what people ask is how likely is this going to impact the current theme for the Fed, right? Which is, well, the current market theme for the dollar is mostly when is the Fed going to cut, right? So every data we see, we ask, is it allowing us to understand that they're going to cut earlier or later? If it's earlier because of issues with the data, then you remain bearish the dollar. If it's sort of getting pushed back and the data is suggesting they're going to cut a lot later on in the year, then the dollar does see some positivity. And that's something to consider, especially if you add on kind of what markets are positioned anyway, shall we say. I just want to see if there's anything else here. Trump seems adamant to exert control over the Fed Reserve, potentially undermining the Fed's policy independence. Remember, we've seen this before, the Fed's independence being tested. And if that's tested, then it does become a bit of a problem for the USD. But it just seems like right now people have kind of overlooked it, but it can definitely creep back up again if need be. Dollar position in the world's currency. Still, any weakness in the USD in the US currency in the coming sessions may not translate to a bigger trend. According to Goldman, there are still plenty of reasons to be positive on the greenback despite the latest threats of independence. Kind of agree with that, because if we also look at last week's NFP, we saw employment change, average hourly earnings staying the same. NFP did come a little bit lower, but the unemployment rate was a lot better by 0.2%, which is quite big in the unemployment rate. Consumer sentiment did improve as well. So overall, we have to ask is yes, the labor market is slowing down because of, again, NFP is sort of getting worse over time. It's not falling off a cliff, meaning it's not screaming doom and gloom where people now think, oh my God, now the Fed has to cut super aggressively and they have to cut at every single meeting now. It's like, it's coming in nicely lower. The unemployment rate is a bit better. And does this scream doom and gloom? Not really. It screams for them to cut for sure, but there's no rush to cut. It's when that rush to cut comes through is when the dollar becomes weaker. So each week we ask ourselves, is the data suggesting the rush to come through? If it does come through, then the dollar can become weaker for the time being. But right now, I can't really see too many reasons to be bearish to the dollar at this given point. Eventually we will, but just not right now, in my opinion. So hopefully that just makes a bit of sense on the overall thought process behind the USD. Let me just double check what ING mentioned, because I did see something this morning. If I just do this one. Today is the 13th. This one here, wasn't it? So obviously we saw CPI, that's fine. A chunk of hawkish repricing already occurred last Friday after the jobs data. And they obviously implied the cut probability on the back of investigation story, which is what we saw from Powell, or the issues around Powell. This means the upside for the dollar is not huge, but could allow USD crosses to keep edging back towards the last Friday's close. Then they're going to say the move surpassed January's low. And then obviously we saw a bit of issues around Japan, which we'll speak about a bit later on. So far, I think it does kind of point slightly more higher for the USD. So for example, what you could do is, I'm not going to say like huge amounts of upside, don't remember, because we are bearish on the longer, higher time frame. It's just that I'm thinking near-term time frame for the time being. So what we want, right, is obviously a pullback. So if we just do the low to the higher and then drop down the time frame, we have to think where is an area of demand being formed. So we have one right here, which we're in, or which we've kind of reacted from right there. But we also have one just above the 50%, which is okay. Obviously lower the better, but I'll be happy with that. It lines up with prior highs as well. So what we want to be thinking is, okay, if the data this week so far, and Fed speak as well, points to less cuts for the time being, then the dollar can see some positivity. Just watch the issue around the Trump story and Powell, because if that does develop a bit more of an issue, then yes, the dollar can come in lower because it stresses independence. And well, USD doesn't do well in an environment where there's uncertainty around Fed and that Fed policy. We've seen this before, and it happened many times where, you know, independence is tested, the dollar comes in lower, and then people assess it and think, how likely is it to really drive something? But right now, for sure, I don't see it developing too much for the time being. But yeah, what I'd want to see is either the highs being taken. So for example, we want a high being created, and then we want to get in on the higher low to create another higher high. If not, it's perfectly okay, because we have another region here and then another push. So either one of those two regions, one we're in now, and then there's another one just below it. Obviously this is better because it's lower, but nevertheless, just watch that as well. Dollar Swiss, the only sort, you'd want to only just trade it to the next high. Yeah, I mean, we just missed that 6-hour demand zone, which is fine. It doesn't have to exactly hit it, as you know, unless we did go in on the lower time frame. That is pretty crazy. We've just tapped into it exactly on the dot. Trying to zoom in a bit more. Yeah, exactly on the dot, which is pretty crazy. But nevertheless, I guess we tapped into that demand zone. Obviously, spreads you wouldn't have got in because of spreads. But nevertheless, we could probably trade it a tad bit higher. Maybe not like a huge amount, but it is an opportunity. So what I would like to see is this lower high being taken, because remember, this lower high created the lower low. So we haven't broken structure yet until we trade above that high. So we close above the high, then we get in on the pullback. What I'd be watching is more so these prior highs, and then hopefully we have a demand zone there. We have a very small 6 hour. Let me just double check. And then, yeah, it would just be those highs. There's no demand zone there to be tapped into. So unless you're looking at the really small 6 hour, but yeah, back into those highs once we get that breaker structure, and then we'll long it. First, you can target there as a bit of a safety net, but overall, if we see that this week the data, or at least speeches, points to less likely of a cut, we can trade up to there, as long as this issue around Trump and Powell, the independents, doesn't get worse. That's the main thing. That's the thing you have to think about for the time being, is if it doesn't get worse. And dollar yen, we are pushing into 158.8, very, very close to 160 now, just because, again, we've seen a bit more political issues in Japan. And remember, Japanese yen anyway is quite sensitive to a lot of these political issues. So if there's political issues in Japan, like we've seen many, many times late last year, people now think, okay, well, we don't want to be investing into the yen when there's political issues, which I'll get onto a bit later on anyway. So for now, dollar yen can continue to trade higher for sure. So if you add on that idea as well, equities can also trade higher for the time being also. Should technically come a bit lower because of rate cut expectations have got pushed back, but it is doing quite well because of there's not, like, the data is still pretty decent, or at least the data is still okay, and there's not that much the price out that would allow the equities to come in quite nicely lower. There's nothing there in the market right now that could stress that. The only one would be independence around the Fed. If it gets stressed further, like what we saw on the open here Monday morning, all that stress coming in lower, and then people looked at and said, okay, it's probably not going to develop into something too much, but it's something to think about for the time being. So that's myself on the pound. Let's move straight on the dollar, let's move straight on to the pound. So let's have a little look. Now, Bailey is expected to speak this morning. I haven't seen too much news about that or any sort of articles. The full text will be released on Friday, and it's unclear how much will be reported today and what we'll hear. Oh, is that the thing we saw on Friday from? Yes, okay, that makes sense then. So obviously this Friday we do have, where is it? Bailey. So it might just be that if they're talking about the same thing. On only Thursday's GDP can move the needle a little bit, while the next week's two major jobs and inflation are only due on the 20th and the 21st of January. Two more members will speak tomorrow, Taylor and Ramsden, who both voted for a cut in December. Euro GBP has settled below 87, which is an area for modest short-term undervaluation. Our view that the BOE will cut in March remains more dovish than the markets are pricing and underperforms a gradual appreciation for Euro GBP in the coming months. Somebody asked that in Discord about Euro GBP, and I would agree with the upside for that trade. It makes sense, right? We just have to think about price action. So we want to be seeing sort of those break of structures occurring. Where did we see it? We saw that's not a lower low. That's not a lower low there. So that's not a break of structure, right? That didn't even close above the high there. So you might think that that was the break of structure, but that low is not a low because that's the last higher low that made the higher higher. But because if it closed below here, then that would be the lower high, if that makes sense. But because we didn't, the only last significant high low is here and here. Those are the two significant points of this trend at this point. So we've now broken it to the downside that broke the structure here. This is just very short-term price action structure. So let me just delete some of this. Now, we have to think about, that would technically suggest downside in Euro GBP, but I just don't want to take downside. It just doesn't seem feasible, at least in my opinion. The only reason it could go down is if we see market, like the amount of longs being priced into the euro, begin to become a bit of a struggle, which should eventually happen. It's just a matter of when would that struggle come through. And the struggle will only come through when we see issues around Europe developing, because now people think, oh, we're quite stretched. And it does make sense based on recent fundamentals. Maybe we should start taking some profits on our euros. And then, yes, Euro GBP would come lower. But I would agree with a bit of upside like ING. They want upside as well. We have to purely think about is timing. What would be the timing for us to get in? Now, let me just quickly show us this MUFG doc. There's not been too many good docs recently. Obviously, people are slowly starting to come back now in terms of people at the institution. So hopefully we should start to get some good stuff coming through. But let's just see what they're saying about the pound. So they say we will talk of a closer alignment with the EU to help strengthen the pound. GBP has continued to rebound at the start of 2026, extending its advance following the autumn budget. Then they've gone to talk about Euro GBP, and they said move lower in Euro GBP accelerated last week after the pair broke below the 87 handle. On the same period, cables climbed from a low of 130 to the high of 135. And the latest positioning has sharply reduced longs, briefly flipping to shorts by late. However, leverage funds have since been rebuilding longs throughout December. And then they're going to talk about this one, autumn budget around the labour market as well. And they said, or the Labour Party, sorry. And our analysts found no strong statistical relationship between long-term gilts and the pound performance around the autumn budget. And then lastly, they're going to talk about a bit on the MPC. So let me just briefly read through market statistics, but you to come further to ahead with 50.45, easing price in by the end of the year, bringing policy rate in line with our forecast for terminal of around 3.25. In contrast, we have dropped our forecast for one final ECB cut this year and now expect policy rate to remain at 2%. Narrowing the differential between UK and Eurozone should continue to encourage a weaker pound against the euro, lifting Euro GBP. So a lot of people do agree with Euro GBP because technically Europe is a lot better off than the UK, but it's just price action, just near-term price action. Let it do its thing. We don't want to rush in and get into a pair, right? We want to, if you're going to take the opposite direction that makes sense fundamentally, you have to have a reason to take that trade. You can't be like, oh, let's say I'm long Euro GBP, but because we've made a lower low and a lower high, I want to now sell Euro GBP into my buyers. You don't want to do that, because what you're doing is you're basically going against the probability. The probability state, it should go higher over time than lower. So you'd want to go where the probabilities lie. You don't want to be taking trades that are out of the norm, right? It doesn't make sense for it to go lower. So why has it gone lower? Short-term stuff, nothing that's really changing the narrative. So what we do is we let price action do its thing. We don't trade the price action, only price action narrative, do we? We want both to align with each other. We don't want to take one against the other. We want them both to align with each other. That's why with the dollar, we could potentially go from longs because something's starting to build, right? Whereas in Euro GBP, it doesn't make sense. So hopefully that makes sense for the individual who asked about Euro GBP. But I mean, apart from that, we have not really got that much else for the week. If I quickly share my screen back here, we haven't really got that much else. Obviously, we have GDP, on Thursday, mostly focusing on the 3-month. And then Bailey, I believe that's a pre-recorded, if I'm wrong. But nevertheless, we would just want to see if there's anything different there. And then next week is when a bit more on the pound we should talk about, because we have CPI, we have claimant counts, we have average hourly earnings, we have the unemployment rate. So quite big amounts of data. And you can see how busy next week is. The BOJ, PMIs, US PMIs, UK services, GDP, PCE. It's quite important next week. So hopefully we can get some good pullbacks, shall we say. But yeah, I don't really want to be long the pound, I will be completely honest with you. So with that in mind, let's have a little look. The only issue with this, like we know, we were speaking about this, obviously our last breakdown, it should go lower, GA, but price action. Remember, we want both to align with each other. Has this created the lower low? Has this created the lower low? The reason we look at it in the higher time frame is because we look at it in waves, right? And I did make a video about that. And in between those waves, you had short-term price action like that. If you drop to the lower time frame, it will look like that, as you can see. Lower lows and lower highs. If you go even smaller, within this sort of these pullbacks, you have miniature trends here as well, like that. And then on the pullback, on the moved lower, you have etc. You get the gist, right? So what we're thinking about is the high time frame wave. So we made the lower high there, broke below the low here, so that created the lower low here. We then made the lower high, but this is not a lower low. So for us to go lower, we're going to need a break of structure, in my opinion. And are we seeing that? No. We're making higher highs at the moment. We made this new higher high here. So right now, it's a bit difficult to be super bearish GA. So yeah, right now, I probably would leave it alone for the time being. We do want to get in a sell. It's just a matter of waiting for price action to be in our favor as well. GCAD, probably a bit, I think it's a bit of a tricky one. The reason being is CAD has been a little bit of a struggle recently. However, we can actually see possibly a little bit of a lower GCAD just because of a bit of dollar strength potentially. we see that strength come through, then CAD will obviously appreciate. So GCAD should come in a little bit lower. However, price action is price action in our favor. No, it's not. This is not lower lows, by the way. These are not lower lows because we didn't close below the low. That's the low, the higher low. Why? Because we created the higher high, because it closed above the high there. Perfect. So that's the high low. We haven't closed below these lows. That's not really a clear break, to be honest with you. So therefore, we can't set it. So as a result, that's still technically uptrending, which again, the price action did follow, but obviously we don't trade, well, I didn't look at price action through this period anyway, so I didn't really look at any charts, to be honest with you. So this is my proper first sort of day back, to be fair to you, or yesterday technically was. But you can see how I would still probably want to get in a sell, but price action needs to be in my favor. So where's the significant part of this trend? This high low here. Why? Because this created the higher high. So therefore, I'd want to see that and then a pullback into a supply zone and then a sell off. G-Swiss, not looking at. I mean, GJ should technically go higher. It's more so because obviously, as you know, the Japanese yen. And well, you don't really want to be buying the yen, to be honest with you, in an issue time or when there's political issues, sorry. So right now, it makes sense for it to go higher, to be fair. You mostly want to focus on the dollar yen when you want to see is there any intervention. And well, we are pretty close to intervention levels. So I wouldn't be surprised if we begin to see them talk about intervention eventually. But yeah, we are in a sort of an area where there has been intervention before. So just be cautious if you're trading GJ anyway. But yeah, apart from that, that's myself on the pound. So the euro, let's have a little look. In terms of the calendar, obviously this week is pretty quiet, to be honest with you. Most people are kind of focused for next week when we do have a bit on the PMI data. But as you can see, this week is pretty quiet. But next week we do start to pick up a little bit. So as you can see, PMIs, and then after that, we should have preliminary CPI, GDP preliminary as well. And then anything after that, ECB meeting. Cool. So yeah, end of next week, and then the week after should also be pretty relatively important to some degree. So right now we have to think, what is going to drive the euro for that time being? And as you know, if there are no reasons or no data that's going to come out that's going to really shift the narrative for the euro, it's going to be driven by other people. So you will then think, okay, what's the dollar doing? Is there any news on the UK? What's the yen doing? If the yen is seeing struggle, euro yen goes higher. If the dollar sees a bit of positivity, for example, euro dollar goes lower. So it's just a matter of focusing on other people for the time being, and then until we get more data. So that's really all I have to add on to that. I mean, ING does say, unless the independence trade returns, euro dollar may have missed its chance to break above 117. As per above, we think US inflation can help the dollar recover. And they go on to talk about, it has re-widened by 9 basis points at the start of the year, and it has the widest since late November. With more upside risks for the USD front-end rates today, we think there could be conditions for a move to 116 in the coming days, which, to be fair, seems pretty good at the moment. Because I'm just thinking about price action. Actually, it's kind of ugly in terms of, I've got 50 drawings on there. Pretty crazy. So for example, we react out of the daily demand zone for the euro, which is fine. We can react out of demand zones, but I'm sure you've seen before where it reacts out of your zone and then it goes completely opposite still. Like it goes long, you buy it, perfect, and a little bit of profit, and then it comes all the way back down to your entry, stop loss or break even, obviously is dependent on your risk parameter. But for now, we have to be thinking is what is going to allow us to be long the euro? Is there anything that tells us that the euro has to go higher for the time being? I don't think so, to be honest, right now. Eventually, maybe, sure, but just I wouldn't say right now, to be fair to you. So all we have to then think is that, okay, if there's not a real reason fundamentally right now, i.e. data hasn't come out and it's pointed really positive, what is going to then? So what I'm also focused on is the USD. Because the dollar will drive where euro goes, it could drive also where the Canadian dollar goes against the euro. It will also potentially drive stuff like euro AUD, where if the AUD weakens because of a bit of dollar strength, then like EA may go slightly higher for the time being. only up to like here, for example. But you can see, because there's no major data, you have to think externally. Once data comes through late next week, then sure. But because there isn't, unfortunately, just think other people. Now, let me see. Let me just quickly open up this one. Scroll down a little bit. Just want to double check what they view snapping the sell off by. Yeah, I don't really see what they're saying here. Yeah, I mean, obviously talking about the legal actions against, the Fed, that's fine. Obviously, a stressed independence, but what markets care about, obviously, this is all very like newsy. What you have to think about is cutting through the noise and thinking, is it relevant to the USD right now? It was initially, because there's obviously new news, markets react to new news, but what people then ask is it then likely going to allow the Fed to cut earlier or not? And what they saw was probably isn't going to do too much. So right now, people then just go back to square one, back to where we were prior to this news, which was focusing on when the Fed is going to cut. Is there data telling us when they're going to cut? If nothing's telling us, then the dollar remains a little bit stronger. So yeah, I mean, I haven't got much else to add on, to be fair. So right now, EUR/CAD is quite wicky actually. So we create these wicks here, and we created some wicks down here. On the 4 hour, yeah, I would be watching around here for an entry, but I'm just a little bit cautious of the dollar though. That's the only issue. So there are two scenarios. One, we go higher, and obviously one we go lower, which is again is obvious. But we have to think is what is more likely to occur based on what we know. And for me, I would probably be more likely to sell it for the time being than buy it. I wouldn't have too much confidence to hold the sell though, just because, again, Euro is still technically better than Canada. So you don't want to be holding like a hot potato for too long. You can capitalize on it for sure, but you don't want to hold on to it for too long because you will get burnt. So I'm just trying to think where we can get in a sell. It's going to have to be lower time frame, I reckon, unless we get a push to the 8 hour supply zone. But yeah, apart from that, I can't really see too much else. Euro AUD, like I said earlier, we could probably go a little bit higher because of the USD, but I don't think it's going to be like a big new trend being formed and then it goes much higher. Just because Australia is not bad at the moment. So it's just something you don't want to be fighting for too long. Similar for the EUR/CAD trade. We want to be long EUR/CAD technically, but we're just thinking about near-term price action, like what could happen over the next sort of couple of weeks or so. So right now, Euro AUD may go a little bit higher because of the dollar strength, but eventually we'll sell. We'll sell back the dollar, we'll sell back Euro AUD, but for now, just think tactically. This is more tactical trades. Euro GBP, we looked at it a bit earlier, and a lot of us can probably agree that it should technically go higher, just because Euro is better off than the UK. Euro Yen, obviously, is kind of similar to a lot of yen pairs. It should continue to go higher, just because of political issues in Japan. Euro New Zealand, it's quite ugly price action, as you can see. Yeah, very, very ugly price action. You can see here, anyway, when we last looked at it, we didn't even broke above the high and we didn't do it again. So you don't want to take any trade when that happens because it's not trending at that point. It's just creating wiki volatility. Then lastly, Euro dollar. I would probably want to sell it a little bit more just because I think positioning is a little bit too stretched for the euro. Now, remember, positioning can stay stretched for a long time. So what we have to think is what is going to become the reason it sort of people reduce the amount of longs they get in, because the more it stretches, the more of a bigger reason they need to long the euro. And if there's nothing coming through and we're not seeing any more big new news, people begin to take profit. And when they begin to take profit, it's not driven fundamentally, it's just purely being driven by positioning being too strong. So they need to dial it back a little bit before re-entering longs again. So that's what I will be thinking. It's not that people are suddenly very bearish the euro. It's just that positioning is a little bit stretched. So they do need to dial it back a little bit before re-entering the longs again. So that is myself on the euro, the pound and the dollar. Let's move straight on to the AUD, the CAD and the New Zealand. So the Australian dollar, the CAD and the NZD, they're going to be pretty quick this week. Just because we haven't really got much data wise, it's pretty quiet to be fair to you. Obviously, with both the AUD and the NZD, you are kind of focusing a bit on the dollar for the time being, because that is kind of driving where overall risk sentiment is going in terms of risky currencies or not risky currencies, right? If the dollar is a bit stronger, risky currencies like the AUD and the NZD, they don't tend to perform too well majority of the time, 9 times out of 10, right? And because we haven't got any major data for either of them, so let me just quickly share my screen. This one over here, this one, you can see that from, well, this week I've got NZD, CAD and the AUD all in one filter, and literally nothing this week, as you can see. So we have to think next week, yeah, sure, you know, next Monday we have CPI from Canada, hopefully can actually point to some goodness there. And obviously then we can think, okay, how does this then impact the Bank of Canada? What's Bank of Canada going to do? Maybe the CAD can go stronger. But for now, you have to purely be focusing on what is going to drive risk currencies. So AUD and the NZD are going to follow the dollar as well as the CAD. So it's actually quite easy. I'm going to cover all three pretty much at the same time, because data-wise it's pretty dead. I've not seen any news on either of currencies for a while. Everyone is kind of talking about the USD right now and a little bit on the euro and of course the yen. So right now these AUD, the NZDs and the CADs are all taking a back seat and just following what the people are doing, to be fair to you. So let's have a little look. So we'll start with AUD CAD. Now, AUD CAD, as you know, we are looking for long still, which is still good news. So I do still feel like we can go higher. I'm just a little bit cautious of a pullback. Now, you obviously don't want to be buying at these highs, right? That's, if you just think about it in a fib term, if we just go from this low to this higher, you can see that's around 38% retracement. You don't want to be buying at 38% most of the time, right? You want to be waiting for at least 50%. There are some instances where you can buy a little bit higher if the trend's like really driving and it makes a lot of sense, sure. But majority of the time, we don't want to be doing that because it just doesn't make sense. It's too risky. It's just not worth our time. So we want to be waiting for at least 50%. And it makes sense. If you we looked at this prior high here, like it made sense. We now want to come back into those prior highs to then go back up again. So I'm just trying to see if I've got the daily 12, 8, 6, 4. I'm just trying to see if there's any demand zone around there. And there's a very, very small 6-hour demand zone. If we just push it towards the prior highs, that would make sense. That's a nice, good old move. Hopefully we can get a bit of a reaction. I'm not too fussed about it. If we don't get a break of structure, then we don't get him. But for now, AUD CAD still looks good for upside. AUD yen obviously still goes higher. It makes sense still. AN, we were looking at a bit of a retracement there, but we just didn't get that break of structure, which is fine. You know, we're not arguing against that. Break of structure was technically there because remember that created the higher there. That's not a high. That's not high because we didn't close above the high. So this closed above these highs here. So therefore it's a higher high. We didn't close below the low. So therefore it's not a break of structure. And this is why simple price action is what you want to be doing. But yeah, AED, NZD, I will probably leave alone for the time being. Then lastly, AU. We already spoke about this. We could probably see a bit of dollar strength for the time being. So where would I want to get in though? That's the question. Let's just go from the low all the way to the high. We're already at 50%, but I don't want to get in because I don't think timing is here in terms of data or sentiment or news. So we would probably then see a move back towards these highs here, this high, this low, this sort of low, this, yeah, and that break there. So that looks pretty good. We just round that to a whole number. We can round it to 65. Where's 66 landing? Yeah, we'll round it to 66. I think that's quite a nice whole number. So 66, obviously that would be 100% retracement. And it makes sense from a dollar perspective. We can tactically get in as well, which is perfectly okay. So yeah, I'll wait for a bit of a better price action to form. But I do feel like this is a good sell for the time being until we see something develop in the US that points us to being back bearish the USD. So right now, around there on the 1 hour, looks for a good pullback to a sell. CAD, yeah, I will leave them alone. CAD yen, obviously, it's a bit choppy. CAD Swiss as well. It's ugly price action. We can all agree with that. We don't want to be getting in at those price action. Very choppy. It's quite ugly. Let's move on to NZD CAD. It's kind of following a bit on the AUD, to be fair. It's kind of similar. But overall, AUD CAD, we have broken the higher. Doesn't mean we want to be buying it, though. That's the main thing. Even though we broke a high, made a high, we have to think about relative terms in terms of fundamentals. Does it make sense? And I don't think it makes sense. I think we've just reacted out of this 4-hour supply zone. which also lines up with about 80 points, just below 80.2. And a break of structure is technically here. Actually, no, that's the 4-hour trend. Oh, there's not many good higher lows here. As you want higher lows to be like that, and then a push, and then you can clearly mark out that higher low, but there just isn't. So I think we might have to be a little bit aggressive. I'll be watching here if I drop down to the 30-minute. Yeah, there's also 30-minute supplies in there. I think that's the high low on the 30-minute. Yeah, you can see the 1-hour high lows is not very clean, but if you drop slightly lower to 30 minutes, you can see it is a bit cleaner where that high low create the high. That high there made the low here, very small pullback, and then a nice push. So that looks pretty good. Obviously, if you want to wait a bit longer, you're more than welcome to. You can wait for that high low to be broken. It's completely up to you though. NZD, JPY, I am not looking at. And then NZD, USD, we could probably sell it off a little bit for the time being. I would only sell it off into probably around this high here, which is about 56.75. So if I just horizontal line it to 56.75, there we go. Probably around there, looks pretty good. So not much downside. To be fair to you, only about 20 pips, but that's the only level I would want to be watching for NZD USD. And then below that would be around 56, so only literally 75 pips below that. So overall, that's myself on all three currencies. Pretty quick. I mean, just purely follow the dollar. If the dollar sees a bit of upside momentum, which should personally continue, AED will probably struggle mostly against USD. NZD will struggle. CAD may benefit against possibly stuff like the euro, possibly, and also against the AUD. So there is a bit of opportunity from a tactical perspective. Just remember, these aren't higher time frame trades. These are ones where you're going to be probably holding for a few days, maybe a week, possibly longer. So if it obviously develops into those sort of higher time frame trends, but you're going to basically hold it until the reason that you are short or you're long the USD begins to shift away. So just think opposite to why it's so strong, and then that's when you start to exit. Or you can exit highs. Obviously, it's personal preference, to be honest with you. There is no right or wrong answer. So overall, that's myself on all three currencies. Nice, quick and simple. Let's move on to the yen and the Swiss. So the yen and the Swiss. In regards to the yen, obviously right now, if I quickly show you, where is it? This one over here. You can see that with the yen, oh, why is that suddenly closed? There we go. And I'll show you also that one as well. That seems pretty good. Weak yen may spur the BOJ hike in April, ex-board member says. Oh, let me refresh. Don't know why that's done that. The Bank of Japan may raise its benchmark rates as early as April as heightened market concern over Prime Minister Sanae's Takaichi's dangerous approach to fiscal policy keeps the yen weak, according to a former BOJ member. The BOJ must raise rates at least by June or July, but the move could come in April. Now, I think they're more so concerned about the currency, because obviously with the currency, it can affect their inflation as well. A weak currency pushes inflation higher. They obviously don't want that, so they need to keep the currency relatively strong. So what they need to do then, like what this export may, remember, this is just what his personal opinion is. They don't have to do that. They can do what they want at the end of the day. But in terms of what he believes should happen, he believes that the central bank should raise rates early to keep the currency strong, which is technically true. They should do that. Whether or not they are going to do it remains to be seen, I guess. But until then, the yen is going to remain weak because there's no real fundamental reason for that to happen, right? They need a reason fundamentally. So we have to then think is, okay, why would the yen remain strong? Well, you'd need big amounts of dollar weakness, which right now doesn't seem too likely. Eventually, possibly yes, but just not right now. You need the BOJ to want to hike rates. Do they want to? Not really. And in addition, you have political issues in Japan. Is this an environment where, in your opinion, the yen does do well in? No, obviously, you've got all this issues, all this stress. So you don't want to be long the yen if there are all of these issues. Once we start to see some of these issues turn away, then sure, yes, we can get in. But we don't want, we're not seeing that. Now, obviously, we saw the yen drop to its lowest level since July 2024 as losses accelerated following the concerns or speculation that Prime Minister Takaichi may soon call a snap election. With Prime Minister popularity running high, going to the polls would likely cement her authority and bring a second wind to the so-called Takaichi trade, which has helped fuel bond losses and weak Japanese currency. Japanese officials, including Katayama, have stepped up warnings against what they describe as excessive and speculative FX moves. She and US Treasury Scott Bessent shared concerns about the weakening yen during bilateral meetings in Washington. And in Japan, intervention decisions are made obviously by the MOF and executed by the BOJ through a handful of commercial banks. The government typically sells dollars to strengthen the yen in the spot market, which, as you probably are aware, increases that demand. So what we now need to think is, what is more likely? The yen to strengthen or the yen to weaken? Well, right now, everything is pointing to yen weakness, right? Nothing's telling us to get long the yen, is it? Everything tells us to sell the yen. We've got political issues. We've got the dollar's not really selling off, to be fair to you. You've got the BOJ not really wanting to hike rates anytime soon. This guy believes they should do it, but that's just his opinion. That's an ex-board member. But yeah, that's just something I wanted to mention for the yen. Regards to the Swiss, there's nothing, to be honest with you. As you can see, it's kind of just following a general market dynamics. I'm not seeing any news as well this week in regards to both currencies. It's a bit of a quiet one this week, to be fair, as you can see. PPI, it's not too much of importance for the yen. And then Thursday and Friday is pretty dead, as you can see. So nothing at all. So overall, what you're thinking about both for the yen is there is no reason to go long, is there? Ask yourself, why would I go long the yen fundamentally? Like, why would you sell dollar yen, basically? Nothing's there to tell us to sell the yen. Or sell dollar yen, or buy the JPY. So as a result, you still remain bearish the yen. You still look for those higher lows and higher highs in like dollar yen, or AUD JPY, or Euro yen, right? Because these are trades that make sense. So overall, that's myself in the yen. And in regards to the Swiss, not seeing too much. It hasn't really benefited too much off the back of all of the issues that we've been seeing around Greenland. So overall, it seems as if markets are kind of starting to go bearish to the Swiss as well. Because remember, inflation is low. Central bank is quite dovish, to be honest with you. So as a result, markets should now start to go back being bearish the Swiss, because we haven't really got anything that would allow them to get a stronger Swiss. For example, people aren't too concerned about buying the Swiss when there's all this stress, because they'd rather go to gold. That's where it seems more likely for profits, apparently, according to markets. So let's move straight into gold then whilst we're here. Go on the daily and let's work our way down. And we have to ask ourselves, why would gold continue to go higher? Ask ourselves this as well. Is there still continued stress? Are people still worried in the market? Yes, I would say so. Not like immensely worried, like doom and gloom sort of worry, but as long as people stay vigilant and quite vigilant around sort of Powell, around the Greenland scenario, people are still going to be buying gold, right? People still understand that this is not really going to go away anytime soon. So gold should remain supported. However, we just want a pullback, right? We don't want to be buying this high here. We want a pullback. So at least for me personally, into this prior high. But to be honest with you, we can see that there is a bit of a gap there. So we may just close this gap here and then eventually go higher. So back into around 4,500. We just round it to the next whole number, 4,500, and then a nice push back up again. Because you don't want to be buying at the highs. And if we understand there's going to be a pullback, well, at least a pullback should happen to here. If not, I'd rather buy here at 4,500 because, well, as you know, it's a nice big whole number, quarter number. So yeah, that's myself for today's session. I appreciate you all for being here and it's good to be back. Of course, I'll see you on Friday. And of course, if there's any other questions about today, please let me know. But apart from that, everybody, have a good rest of your week and I will see you on Friday. Take care.